Okay, so today we are going to discuss the second topic under partnership accounting, and we have now your partnership operations. After the partnership is formed, and we have the journal entries in chapter 17, and of course, we have to determine the capitalization of the partnership. Now, with regards to partnership operations, we will involve division of net income or loss. But of course, we have to consider the methods of allocating net income or loss, like giving of bonus to the managing partner, giving of salaries to the partners who actively involve themselves in operations, and then we give interest to the capital investment of the partners, and whatever is the balance, it will be divided based on the agreed ratio. So we have to consider that the problems that we will solve now, or we will answer, will involve allocation of net income, computation of bonus. Then we have the methods of dividing profits and losses. That's very important. So in our problem now, with the straight problems, we are going to take up straight problems number 1, 3, 5, 6, 8, 9, and 12. And after, then we will involve the multiple choice problems and theory. So take note, we have quite a long way to go, so that by tomorrow we will already take up chapter 19, which is quite a long topic also about partnership dissolution. So by now, let's go straight to problem number 1. Here, 4. Assume that a net income of 345,600 is determined for X and Y partnership at the end of 20x4. Regular withdrawals by partners in anticipation of net income have been summarized in the drawing accounts. Permanent capital changes have been summarized in the capital accounts. Drawing in capital accounts at the end of 20x4 appears as follows. So we now have the capital accounts of X and Y, and as well as their drawing accounts. Now the capital account of X, with the credits of on January 1, 360,000, and on April 1, 72,000. Now for Y capital, with the credits on January 1 of 504,000, on November 1, 72,000, and on March 1, there is a debit to Y capital for 36,000. So we have now your capital accounts. Then for drawing, X drawing got a debit balance of 43,200, and Y drawing of 136,800. So these are now the balances of the capital and the drawing accounts, and we are asked to prepare journal entries to allocate net income based on number 1, beginning capital; 2, ending capital; 3, 6% interest on excess average capital balances, and the balance allocated in the ratio of 1:2. So let's now begin with requirement number 1, when we have to prepare journal entries to allocate income based on beginning capital. So our income is 345,600, 4,600. So we now debit to income summary. That's your temporary account closed now and representing net income. So we credit to X drawing and to Y drawing for 144,000 and 201,600. Now, based on the beginning capital balances, the beginning capital balance of X is 360,000 and that of Y is 504,000. So we now get the ratio of dividing 360 by 864 and we multiply it by the amount of net income. That's for X. And for Y, dividing 504,000 by 864,000. So now we have divided the net income to X and Y based on the beginning balances. In the case of number 2, we prepare journal entries to allocate net income based on the ending capital balances. So we now have a debit again to income summary for the same amount of net income. Then credit to X drawing and to Y drawing as computed. X capital end is 432,000. That's found on the credit side. No debit to X capital. Then for Y capital, the total credit of 576,000 minus 36,000. The ending capital balance of Y is 540,000. Adding it to X capital balance, we now get the total capital balance end of 972,000. So we allocate the net income by using the ratio 432 over 972 and for X. For Y, 540 over 972. So the share of X in the same amount of net income is 153,600. We credit to X drawing and credit to Y drawing for 192,000. Take note that for the share of the partners in the net income, we credit to drawing. In other words, the drawing account will be credited for share in net income, will be debited for share in net loss, and still drawing will be debited for the actual withdrawals of the partners. However, it's stated that in anticipation of net income, you have to summarize regular withdrawals by debits to the drawing accounts. However, permanent capital changes have been summarized in the capital accounts. And you have your, in the debit side of Y capital on March 1, you have a debit of 36,000. So this is considered as a permanent capital change. Okay, so we have now your requirement number 3, 6% interest on excess average capital balance, and the balance allocated in the ratio of 1 is to 2. So for our interest on excess average capital balance, we now debit to income summary crediting Y drawing for the interest allowed based on the average capital. So Y's interest on excess average capital is 6% of 486,000 minus 414,000. So the excess you multiply by 6%, that will give 4,320. We debit to income summary, meaning this is already partially distributing net income based on the interest allowed. Now, the 414,000 for X capital. On January 1, we have the capital balance of X of 360,000. But on April 1, there is an additional investment of uh, 72,000, giving the total capital balance of X by April 1 equal to 432,000. The 360,000 capital balance of X remained unchanged for 3 months. That's from January 1 to March 31 or April 1. So that makes 3 months. And you multiply it by 360,000. You get 1,080,000. Then from April 1 up to December 31. Now, the total or the ending capital balance of 432,000 and multiplied by 9 months from April 1 to December 31. So you multiply 432,000 by 9, giving 3,888,000, and then we get the total 4,968,000. That's good for 12 months. So the average of 414,000. That's why the interest on excess average capital balance is 4,320, with the interest on excess average capital. That's equal to the amount of uh, 486,000 minus 414,000. That's equal to 72,000, and you multiply it by 6%. So giving 4,320. Now for Y, the capital balance of Y on January 1 is 504,000. That remained unchanged for 2 months. Up to March 1, there is a debit of 36,000, bringing down 504,000 to only 468 because of the debit of 36,000. So you have 468,000 remained unchanged for 8 months. That's from March 1 to November 1. So you have a total of 8 months, and you multiply by 468,000. And finally, on November 1, there's an additional credit of 72,000, bringing the ending capital balance of Y equal to 540,000. So the total now of your number of months and change is 12, and for the total of 5,832,000 divided by 12, that gives average capital of 486,000. Now, that's the average capital here for 486,000 and 414,000. The total now is 900,000. That's for the total of the average capital. So, Y will receive an interest of 4,320 because his average capital is 486,000, and that's higher by the amount of 72,000 excess on average capital for 72,000, and then we multiply that by 6%, giving 4,320. Now, that's a requirement. The net effect of the foregoing on capital is the interest on excess, 4,320, and the balance is to be divided, as stated in the problem, is to be allocated in the ratio of 1 is to 2. So, meaning, 1/3 to X and 2/3 to Y. That gives the credits to the capital accounts of the partners. So Y will have a total credit of 231,840 plus the interest credit of Y drawing of 4,320. Next, we go to problem number 3. Allocation of net income with bonus, salaries, interest, and income tax. Now we have 8 different cases. The net income of A and B partnership for 20x4 amounted to 504,000. A is the managing partner. Assume that the partners agreed on the allocation of net income as follows: bonus of 20% to A, salaries to A 48,000 and B 72,000. Interest on average capital balances A 14,400 and B 9,600. Residual balance in net income be allocated to A and B in the ratio of 2 is to 1. Prepare schedule to allocate net income assuming bonus is based on net income before bonus, salaries, and interest. So we have now the bonus of 504,000. So we now provide 2 columns for A, B, and we have another column for the total. So all in all, we have 3 columns, A, B, and for the total. Now, in case number 1, bonus is based on net income before bonus, interest, and salaries. So we have now the net income of 504,000, and we have this as the basis of the bonus. So you multiply 504,000, 404, 504,000, and then you multiply by 20%. The bonus to A is 100,800. So extend that to the total column. Then for salaries, as given, give salary of 48,000 to A and 72,000 to B. So the total is 120,000. Extend to the total column. Next, we have salaries, 14,400 to A and 9,600 to B, extend to the total column. And the balance is to be apportioned in the ratio of 2 is to 1. Now, how much is the balance? If we have the bonus, so 100,800, and then we have salaries of 120,000, and 24,000 for the interest. So we now get the total of 294,800 to be deducted from the total net income of 504,000. So the difference is 209,000, 259,200. So again, we are going to add here bonus 100,800, salaries 120,000, and then we have interest equal to 24,000. The total of 294,000, no, 204,000 244,800. And then 244,800 we deduct from 504,000. The difference is 259,200 to be a portion in the ratio of 2 is to 1. So meaning two-thirds to A and one-third to B, that will give a total of 259,000. So the total share of A in the net income is 336,000. That of B is 168,000. Okay. Now, in the case of number two, bonus is based on net income after bonus, but before salaries and interest. So, before salaries and interest. So, if we have the net income equal to 504,000 and bonus is based on the amount of net income after bonus, but before salaries and interest. So how much now is your bonus? The bonus is 84,000, and we still have the salaries and interest the same to be given. So that leaves the balance of the net income equal to 276,000. Now, if the total net income is 504,000 and the bonus is still equal to 20%. So you have the 20% portion equal to 84,000 after deducting the bonus. So if you have the amount of the bonus equal to 84,000, the balance is 420,000 to be allocated to salaries, interest, and the balance. For number two. Now for number three, the bonus is based on net income after bonus and salaries, but before interest. So the bonus is based on net income after bonus and salaries, but before interest. So we now have let B is equal to the bonus, let S is the salaries, and I the interest. So B is equal to 20%, or your bonus equal to 20% of net income after bonus and salaries, but before interest. So our bonus is equal to 20% of 504,000 minus bonus and minus salaries. So the bonus is 20% of 504,000 minus the bonus and minus 120,000, since the amount of salary is already given. And we have now the bonus equal to 20% of 384,000 minus the bonus. So the bonus is 76,800 taken at 20% minus 20% B. So again, 1.2 B is equal to 76,800. B is 64,000. Now, if you want to prove that your bonus correct, so we have now the net income before bonus, salaries and interest equal to 504,000. Then we deduct the bonus of 64,000 and the salaries of 120. So net income after bonus, salary and salaries, but before interest is equal to 320,000. Then you multiply that by the bonus of 20% rate. So you get the bonus of 64,000. Now the schedule showing the allocation of net income is presented as follows. We now get the bonus to A, 64,000, the total of 64,000. Salaries given, then interest given, and the balance to be apportioned in the ratio of 2 is to 1. Now we have the balance as 504,000 minus the amounts for bonus, salaries, and interest. In the case of number 4, bonus is based on net income after bonus, salaries, and interest. So we now get B equal to 20% of 504,000 minus B minus S and minus I. So you get now B equal to 20% of 504,000 minus the bonus minus the salaries and interest. So we have B equal to 360,000 minus B. So that's 504,000 minus 144. That gives us the amount of bonus equal now to 60,000. That's equal to bonus 20% of 360,000 minus B. So your B is 72,000 minus 20B. So your B, 1.2B is equal to 72,000. B is 60,000. B is 60,000. That's the amount of bonus. So we can prove that 60,000 is correct. We now get the net income before bonus, salaries and interest. We deduct bonus, salaries and interest. So we have the net income after the deductions, and then we multiply it by 20%. The amount of net income, the amount of bonus is 60,000. The schedule showing the allocation of net income is presented as follows. So we have now A, B, and the total. The bonus of 60,000. Then we have salaries, the same. Interest, the same. And so the balance of 300,000 is to be apportioned in the ratio of 2 is to 1. We go to assumption number 5. Bonus is based on net income after salaries but before bonus and interest. So after salaries but before bonus and interest. So we have now let B is equal to a bonus. Then you have your 20% of net income after salaries but before bonus and interest. So B is equal to 20% of net income, 504,000 minus 120,000. That's your salaries. So we have the bonus equal to 20% of 384,000 or 76,800. So for the bonus here, in the case of number 5, the bonus is 76,800. For the note of number 3, now we have a similar allocation as that of number 3, as long as we can prove that our net income total is 504,000. Then in the case of number 6, bonus is based on net income after interest but before bonus and salaries. So let B is the bonus, S salaries, and I interest. So B is 20% of net income after interest but before bonus and salaries. So B is 20% of 504,000 minus 24,000. So you get 480. B now is 96,000. Again, refer to, we have a similar illustration or schedule as that of number 3. In number 7, bonus is based on net income before bonus but after income tax at a rate of 35%. So we have now let B as the bonus. B is 20% of 504,000 minus tax. So we have now 100,800 minus 20T. And let T is equal to the amount of income tax. T is 35% of 504,000. So T is 176,400. Now we substitute the equation for T in the equation for B. So let B is equal to 100,800 minus 20% of the amount of tax. Since it's stated that a bonus is based on net income before bonus, but after income tax at the rate of 35%. So we now get the bonus equal to 65,520. So for the proof, the net income before bonus and income tax is 504,000. Then we deduct the bonus, 65,520. We have the net income before bonus, but after income tax. Net income before bonus. So we now get the income tax. So net income before bonus, but after income tax. We now get your income tax of 176,400. Net income after bonus and income tax. So we now get 262,080. Bonus is computed above. Net income is 504,000. We deduct the income tax of 176,400. The net income after income tax but before bonus is 327,600. We multiply by the bonus rate of 20%. So we have the bonus of 65,520. And the last is bonus is based on net income. That is after bonus and income tax of 35%. So let B is equal to the bonus. T is the income tax. B is 20% of 504,000 minus the bonus minus the tax. So we have now B equal to 100,800 minus 20B minus 20T. So let T is the income tax. T is 35% of 504,000. So T is 176,400. That's the tax. Substituting the equation for T in the equation for B. Let B is 100,800 minus 20B minus 20T. B is 100,800 minus 20B minus 20 times 176,400. 1.2B equals 100,800 minus 35,280. So 1.2B equals 65,520. B is 54,600. So for the proof, net income before bonus and income tax, 504,000. We deduct the bonus of 54,600. Net income before income tax is 449,400. We deduct the income tax of 176,400. So we have the net income after bonus and income tax. So we have now the proof, net income after bonus and income tax. We multiply by the bonus rate. So your bonus is 504,000 or 54,600. The bonus is 54,600. Okay, so we now go to problem number 5. And problem number 5 is about computation of average capital. In problem number 5, James, Keller, and Rivers have the following capital balances: 48,000, 70,000, and 90,000 respectively. Because of a cash shortage, James invests an additional 12,000 on June 1st. Each partner withdraws 1,000 per month. James, Keller, and Rivers receive a salary of 13,000, 15,000, and 20,000 respectively for work done during the year. Each partner receives interest of 8% on their weighted average capital balance without regards to normal drawings. Any remaining profit are split 20%, 30%, and 50% respectively. The net income for the year is 30,000. Question: what are the ending capital balances for each partner? What are the ending capital balances for each partner? So we have now uh, we provide four columns for James, Keller, Rivers, and we have the total. So we have now the interest. The interest to be given to James at 8% is equal to, we have now the interest to be allocated. The balance on January 1 to June 1, the capital balance of James is 48,000. From January 1 to June 1, that's 5 months. So we multiply 240,000 by, 48,000 by 5, we get 240,000. From June 1 to December 31, the balance of James Capital is 48,000 plus 12,000. So plus 12,000. On June 1st, uh, James made an additional investment. So the capital balance from June 1 to December 31 is 60,000. We multiply that by 7 months, so we get 420,000. 240,000 plus 420,000. The total is 660,000 divided by 12 or 55,000 for the average monthly capital balance. The average monthly capital balance of 55,000. Then you multiply that by 8%. So the interest on James interest line 4,400. 4,400 as computed below. For Keller, the amount of interest is equal to 5,600, and for reverse it's 7,200. So we now get the amounts of interest given is 17,200. So James 4,400, Keller 5,600, and Rivers 7,200. Total 17,200. For the salary, James will receive 13,000, Keller 15,000, and Rivers 20,000 for a total of 48,000 for the salary. Then the remaining net income or loss is to be apportioned in the ratio of here in problem 5. Any remaining net income or loss is to be apportioned, split 20, 30, and 50% respectively. The net income for the year amounted to 30,000. Each partner receives interest at 8% on the weighted average capital balance without regards to normal drawings. Any remaining profits are split 20, 30, and 50% respectively. So we now get the remaining income or loss for 30,000. We deduct 17,200 and deduct 48,000. The difference is negative 35,000. So that difference, which is negative, that's 30,000, we have to deduct from 30,000, we have to deduct negative 65,200. So the difference is 35,200. That 35,200 we are going to allocate in the ratio of as stated 20, 30, and 50%. So 20, 30, and 50%. Now take note that the balance is not profit, but it's a loss. So the balance of 35,200, that's now to be apportioned to the three partners. 7,040 goes to partner James. Then 30% goes to partner Keller, 10,560. And the balance goes to partner Reverse. So that's for a total of 7,040, 10,560, and 17,600. That's for a total of 35,200. You have the total column 35,200, and then the interest of 17,200 and 48,000 are all positive 65,200, and we deduct 35,200. The balance is the net income of 30,000. So how much will be received by James? Of the total net profit of 30,000, James will receive only 10,360. That's 17,400 minus 7,040, or a difference of 10,360. Keller will receive 10,040 and reverse 9,600. Take note that the total of the three is equal to 30,000. Now we have the statement of partners' capitals as what are the ending capital balances for each partner. In this, we have to begin with the four columns: James, Keller, Rivers, and totals. So we start with beginning balances. James, 48,000. Then Keller, 70,000, and Rivers, 90,000. So the total is 208,000. And then we have the additional contribution of James, 12,000. So extend under the totals column. We have the income above. We have the income. The share of James in the income is 10,360. The sum of 4,413,000. Total is 17,400 minus 7,040. So the income share of James is 10,040 and Rivers 9,600. So make correction in James, that's 10,360. 10,360. And the drawings per month under each column: James, 12,000, 12,000 for Keller, and 12,000 ending capital balances. Beginning balance of James, 48,000. Then we have additional contribution of 12. Then share in the net income of 10,360. The total is 70,360 minus 12,000. So in the column for James capital, that's 58,360. That of Keller is 70,000. Add 10,000, 040, you get 80, 040 minus 12,000, or a difference of 68, 040. For Rivers, 99,600 minus 12, so a difference of 87,600. You add 58,360, 68,040, and 87,600 for a total of uh, 214,000. That's your total of the ending capital balance for the three partners. So that's problem number 5. And we go to problem number 6. Again, we have allocation of net income in problem number 6. As stated, we have the salaries of P and Q. Then we have the bonus on net income, interest on average capital balance, remainder if positive, remainder if negative. Calculate the distribution of partnership net income or loss for each independent situation below. For each situation, assume the average capital balance of 140,000 and Q 240,000. Now for the average capital balances. In number one, the partnership net income is 360,000. In number one, partnership net income is 360,000. So we now go to the allocation of net income of 360,000. Here we provide three columns, PQ and the total. So for first we have salaries, P for 80,000 and Q for 100,000. So the total 180,000. Then the bonus net income. The net income is here given. The bonus on net income as to be given 6% to P. 6% of 3,600. So the bonus to P is equal to 21,600 to Q. 43,200. So you have the total. Then the interest on average capital. As stated, the average capital of B is 140,000. That of Q is 240. And the interest is at 7%. So the interest on P, 9,800. And on Q, that's 16,800. So you get the total. And the remainder is, in case of number one, the remainder is positive because the net income of 360,000, we deduct salaries, bonus, and net income or interest. So salaries, 180,000 plus the bonus, 64,800 plus the interest. So that gives us the total of uh, 271,400. That's the total of the three items. 271,400. Then we deduct this from net income of 360,000. The difference is 88,600. It's positive. So we have to allocate this positive balance in the ratio of 60 is to 40. So we give 60% equal to 53,162P and the balance to Q. So now you have allocated. See to it that at any point, you try to check the equality of your totals here. P and Q, it must equal the total. In the case of number two, the net income is 240,000. So again, we give salaries and we give bonus to net income. Bonus, since the net income is only 240,000 and the bonus to P is 6%. So you only have 14,400 to Q 28,800 and the total. Then the interest on the average capital balance still the same as in case number one. So the remainder, if the total net income is 240,000 and we deduct the total of the salaries, the bonus, and the interest, so we have the total equal to here uh, the total of 249,800. So we have a negative balance of 9,800. Since the balance is negative, as stated, if the balance is negative, this balance is to be allocated equally. So equally, meaning 49 to P and 49 to Q. For the total of the net income share of B, 99,300, and that of Q, 140,700, the total of 240,000. And in the last case, the company incurred a net loss equal to 40,000. So the net loss is 40,000. The salaries the same, but the bonus, no bonus, because normally bonus is given if there is net income, as stated. Bonus on net income. But since there was a loss, so no bonus, then the interest on the average capital balances is still the same, and the remainder now is negative because the 40,000 being a net loss, we are going to add negative gyapon ang 40,000. Then we are going to add negative for salaries, 180. So that makes it 220 plus 26,600. It's 246,600, and whatever negative result should be divided equally. So in the total net loss, the share of B is 33,500, while the share of Q is smaller because Q has a bigger amount of salaries. And you have the net loss allocated. Then after problem number 6, we have problem number 8. Problem number 8 is still with the level of net income. In problem number 8, the question is, determine the level of income that would be necessary so that James would be indifferent to the profit sharing option selected. Determine the level of income that would be necessary so that Jones would be indifferent to the profit sharing option selected. Okay. So Jones would have to receive a bonus of 12,000 to be indifferent to the two profit-sharing options. Since Cable would receive the same bonus, the total bonus would have to be 24,000. Now let's go over the problem before Cable and Jones are considering forming a partnership whereby profits will be allocated through the use of salaries and bonuses. Bonuses will be 10% of net income after total salaries and total bonuses. Cable will receive a salary of 30,000 and a 10% bonus. Jones has the option of receiving a salary of 40,000 and a 10% bonus, or simply receiving a salary of 52,000. Okay? So that means a salary of 52,000. Now, we have 24,000. Now, what is that amount of 24,000? Here, 10% as stated. Bonuses will be 10% of net income after total salaries and total bonuses. Cable will receive a salary of 30,000 after and a 10% bonus. So what will be the level of income here? So we have 24,000 is now equal to 10% of net income minus the salaries and bonuses. So we have 10% of net income since the net income is not given, minus the sum of 30,000 plus 40,000 minus 24,000. So you now get 24,000 is equal to net income times here. Net income minus 94,000. So 24,000 is equal to 10% times net income minus 9,400. So 33,400 is equal to 10% of net income. Therefore, the net income is 334,000 here. Since 33,000 is equal to 10% of the net income. That's problem number 8. Then another here, we have to take up problem 9 and finally problem 12. So in problem number 9, it's still allocation of net income. Olsen and Koch organized the OK partnership on January 1, 20x4. The following entries were made into their capital accounts during 20x4. So we have Olsen, debits and credits. Then Koch, debits and credits. On January 1, credit to Olsen 20, April 1, 5, October 1, 5. Koch, January 1, credit 40, March 1, debit 10, September 1, debit 10, and on November 1, credit 10. The partnership agreement called for the following in the allocation of partnership profits and losses. Salaries of 48,000 and 36,000 would be allocated to Olsen and Koch respectively. Interest of 8% on average capital balances. Koch will receive a bonus of 10% on all partnership billings in excess of 300,000. Any remaining profit or loss will be allocated 60 is to 40 to Olsen and Koch respectively. Account for each situation independently. Determine the distribution of partnership net income. Assume the partnership income of 85,000 and partnership billings amounted to 400,000. Determine the distribution of partnership net income of 100. So we now have Durand, capital and drawing, price, capital and drawings, and Russell, capital and drawings, with the following beginning balances: 75,000, 125,000, and 40,000 respectively. Then on February 1, Durand had a withdrawal of 15,000, price 25,000, and Russell made an additional investment of 30,000, as you can find in the capital column. Then on March 31, Durand drawings again and price, and the Russell drawings. June 30, Durand and price and Russell drawings. On September 30, another drawing for Durand and Russell. So you got the ending balances. For the capital of Durand, 85,000. For the drawing of Durand is a total of 45,000. Capital of price 125,000, drawing of 35,000, Russell capital 70,000, and Russell drawing of 45,000. Determine how annual net income of 200,000 including a gain on the sale of equipment of 15,000. However, it stated that gains and losses from the sale of depreciable assets will be excluded from the above provisions and will be equally allocated among the partners. So in other words, the gain of 15,000 being an inclusion to 200,000 should be separated. So we have now the components of allocation in problem 12. So we create four columns, Durand, Price, and Russell. The profit and loss agreement for 35% Durand, Price 25%, and Russell 40. So you have now four uh, partners, Durand 35%, um, Price 25%, and Russell 40%. These are the profit and loss percentages of the partners. So profit and loss percentages should be stated. Gain on sale of equipment for each partner, we extend under each column 5,000, 5,000, and 5,000. So the total under the total column is 15,000. Under the total column, extend 15,000. Then for the salaries, given 40,000, 20,000, and 45,000. So the total salaries of uh, 105,000. The bonus to price is equal to, so we have now the bonus to price to be given. The bonus to price based on 5%. So it's stated, a price will receive a bonus equal to 5% of the excess sales. So 5% multiplied by 100,000. 100,000 is the difference between 1.1 million, the actual sales, minus the 1 million basis. So you get 100,000 times 5%. So you give a bonus of 5,000. Under the column of price, you add 5,000, and under the total column, you add 5,000. Then for another bonus to the partners, stated the partners will receive bonus of 10% on net income in excess of 150,000 after the total of all such bonuses. So the given amount of bonus to all partners will be computed at the rate of 10% for each. So you get now 30% for the three partners, um, equal to the difference between the net income and 150,000 minus the bonus. So the bonus equal to 30% times 185,000 nga net income. Because the net income is 200,000. However, gindidak anay ang 15,000, which is the gain on sale of a depreciable asset. So we deducted 200,000 minus 15,000. The difference is 185,000 minus 150,000 nga amo ni ang iya nga stated nga amount in excess of 150,000. So we deduct 185,000 minus 150,000 minus the bonus. So finally, 130% of bonus equals 10,500. 10,500. And then we have the bonus equal to 8,076. 10,500. So you now get 10,500 and you have 130% of the bonus. So the bonus is 8,076. 8,076. So you now get 8,076 divided by 3. Divided equally among the partners is 2,692. So we now go back to the summary above. Salaries, then after salaries, bonus to price, 5,000, extend under the total column. Then bonus to the partners, 2,692 for each. So the total is 8,076 as computed. Then we have the interest on capital. The interest on capital is here. We calculate the weighted average capital. Capital is reduced by drawings in excess of salaries. So for Durand, the capital balance beginning is 75,000. That 75,000 remained for 5. Okay, so Durand for 5 months because on June 1, may added nga 10,000. So, how do we compute for Durand the weighted average capital? 75,000 times 5 over 12 is 31,250. Then on on June 1, we are adding 10,000. So the capital balance of Durand is 85,000 multiplied by 4 over 12. Multiplied by 4 over 12. So that makes 28,333. And finally, we have 80,000 times 3 over 12, or the result is 20,000. Now, we are now given the partners will be allocated interest based on their weighted average capital drawings in excess of annual salaries will be considered deduction in capital. So, the drawing account of Durand got a total of 45,000, but the salaries of Durand amounted only to 40,000. So, 45,000, the total drawings, minus 40,000 ng salaries. That's why, ang iya nga total nga capital or the balance of capital by September 30 is only for 80,000. So that's why you have only 3 over 12. You have only 3 over 12 because from September 30 to December 31, you have only 3 months. And from June 1 up to September 30, you have 4 months. So the weighted average capital of Durand is 79,583, and then we multiply it by 10%, the given interest rate. So the capital account balance of Durand, the ending capital balance will earn interest of 7,958. Price, on the other hand, the beginning capital of Price is 125,000. That remained only for 1 month. 125,000. So it remained only for 1 month. And then, nag 120,000 for 2 months. And it's 115,000 times 3 months. And only 110,000 for 6 months. Now, the salaries to be given are to Price only 20,000. That's only 20,000. However, Price had a total withdrawal of 35,000. So in other words, there is an excess equal to 15,000 that should be appropriately deducted from price computation of average capital. Initially, the excess price capital 125,000, the drawing, the excess of 15,000 over the salaries. So we have to deduct 15,000 on February 1. We deduct 5,000. So ang 125 niya minus 5, naging 120 na lang. Times 2 over 12, counting from February 1 to March 31. By the way, we treat the excess of the drawings of price as reduction from capital because the drawing of price amounted to 35,000, whereas the salaries to be given to him is only 20,000. So in other words, the drawings of 35,000 minus 20,000 nga salaries, may excess kid siya nga drawing amounting to 15,000. So ang 15,000, ibuhin ang 5 sa last yung na drawing, June 30, ang second to the last yan, nga March 31, 10 lang. But the excess drawings is 15. So meaning, i-deduct sa February 1 nga drawing niya, i-deduct sa capital balance. That's why nga ang capital balance niya on February 1 is only 120,000. So, or pwede man, mambal ka nga ang 25,000 nga drawing on February 1 is already in excess of his salaries nga 20,000. So, diri nga daan, may deduction na siya sa capital in the amount of 5,000. So, gani nga ngayang capital balance only 120,000. Nag 2 over 12 counting from February 1 to March 31. Sunod, may withdrawal pa gid siya which is already in excess of his salaries. So that's why the capital further reduced by another 5,000 for 3 over 12 up to June 30. And finally, from June 30 up to December 31, the capital balance is only 110,000. So, the weighted average capital of price is 114,167, and then I multiply this by 10% so that the interest on the capital of price is 11,400 17. Then finally, on the capital of Russell, the weighted average capital of Russell on January 1, it's 40,000. On February 1, nag-add siya 30,000. So that makes it 70,000 up to December 31. So you multiply it by 11/12 so that the weighted average capital of Russell is 67,500, and you multiply that by the interest rate of 10%. So the interest on capital of Duran, 7,958, of Price, 11,417, and of Russell, 6,750, giving the total interest of 26,125. Then the remaining profit or loss is to be computed, and that is for 40,799. The given amount of profit is 200,000. However, the gain was separated, and that was 15,000. So the 185,000 difference after deducting 15,000, you deduct salaries of 105,000 and bonus to Price of 5,000 and 8,076 for the bonus to the rest or to all the partners, and you are adding the total of the interest of 26,125. So the total is equal to 144,201, leaving a balance equal to 40,799 to be allocated. So the remaining profit or loss will be allocated by using the P&L agreement, 35, 25, and 40% respectively. Okay, so we have now your problem for number 12, and I hope you will understand, review this, and ask questions if you have any questions. Okay, I'll then proceed. You still have the multiple choice problems and theory. We have a lot of multiple choice problems and theory. I will give you the final answers to this multiple choice problems and theory okay. So we have multiple choice problems. Number one, letter C. Number 2, boy. Number 3, boy. Number 4A. 5A. 6, dog. 7C. 8, boy. 9C. 10C. 11C. 12, dog. 13, dog. 14, boy. 15C, 16, dog. 17A, 18, boy. 19, dog. 20A, 21A, 22A, 23, dog. 24A, 25, dog. 26 boy, 27 C, 28 boy, 29 dog, 30 C, 31 A, 32 D as in dog, 33A, 34B as in boy, 35B as in boy, 36B as in boy, 37C, 38C, 39C, 40 boy, 41 dog, 42C, 43 boy, 44C, 45A, 46A, 47 boy, 48C, 49A, 50 boy, 51 boy. Next, true or false? True or false? Number 1, false. 2, true. Number 3, true. Number 4, false. 5, true. 6, false. 7, true. 8, false. 9 true, 10 false, 11 true, 12 true, 13 false, 14 true, 15 false, 16 true, 17 false, 18 false, 19 true, 20 true, 21 false, 22 true, 23 false, 24 true, 25 false, 26 false, 27 true, 28 false. Multiple choice theory, 29C, 30 dog, 31C, 32 dog, 33A, 34 dog, 35 dog, 36C, 37 dog, 38A, 39 boy, 40E, 41C, 42 boy, 43 dog, 44C, 45A, 46 boy. Okay? So if you have time, tomorrow is Thursday. Tomorrow, I will be discussing chapter 19. However, if you have questions about the problems and all these theories, now you can ask me. Okay? So tomorrow, I will be lecturing on chapter 19 and possibly the next day, chapter 20. However, still, since we have exam on Friday, then I will not hold a class, but I will lecture on the YouTube with regards to the chapter involved. So you can just refer to the YouTube after your exam. Okay? But tomorrow we will meet. So thank you very much for listening and may God bless us all. Okay? For recording. Nga, ano to kay inanimika nga for recording.